So, good morning, active traders, and welcome to our official Trading Week Ahead broadcast. I'm Ken Calhoun coming at you live here on Saturday, November the 2nd. Rally reversal or continuation? We'll see. As always, all information is for educational use only. I do have the All Access Pass available at just $9.97 for my live trading room, plus swing scans, plus small cap scans, plus breakout mastery. Hundreds of hours of training with me live in the markets, just $9.97. You can go to crushwallstreet.com. Sale ends in 2 weeks, so give that some thought. I'm a real money trader with proof I really trade. I've done over 7,000, and probably over 8,000 now, but at least over 7,000 trades this year alone. I'm a real money trader, and I've got a lot of experience that I can share with you. The lessons learned on both successes and near misses, whether we're in the money, buy, or we take stop losses like I did yesterday in you guys. I'm very transparent about both my success and failure as a trader, and I hope that you can learn the difference and develop your own personal trading style that makes sense. So anyway, let's get on with it. Get on with it, Calhoun. What do we got? Well, we always start off with our S&P, right? So S&P rallying to new highs and looks like nothing but buyers, right? We've got a really good exuberant buying in the markets. If it keeps going up, which it may bubble on up for a little while, at least a few more days, before a big epic pullback or crash, which is imminent, there is going to be a big pullback. The question is when. And the bigger question is, are you ready to profit from it and not get hosed or not get stopped out by over trading to the long side up at a bubble rally market? If we keep going up, we want to buy, but be ready for the sell pressure that's likely there, right? We've got the VIX is way down at new lows. The last time the VIX was way down at 12.5, 13 was right before a big crash. The VIX is overcooked. And ask any Wall Street trader, ask any of my institutional clients, ask any prop trader, discretionary trader, the VIX is overdone, and we're likely to see a pop in the VIX and a drop in the market. So be ready for it. Of course, we walk through how to get ready for it in my live room every single day by looking for opportunities and instruments that may bounce, like our inverses like SQQQ and TVIX and other stuff that's way oversold, that when it recovers, the trick is when they recover, especially the VIX ETNs, they spike up sharply, right? They make really quick, epic moves to the upside. We put it in 1 year context. Look how fast it ran up to 82, 85, 80, 87, 86 was the top. Anyway, when it spikes within a several day range. So I think this is way the heck overdone. I've been getting stopped out on the way down. I was in quite a few hundred shares, taking small stops on the way down. I'm still in 150 shares. I've been scaling out on the way down, and I'll scale back in on the way up to make money. So anyway, be ready for pop in the market. If we keep going up, that's great. But in the meantime, beware, be cautious. So here's a few charts that may be of interest to you this upcoming week ahead. These are picks that my members have gotten. MBT was from Small Cap Scans. Western Union was one of my picks last week for my members in Swing Scans. And it's another pick for this upcoming week as well. Western Union had a really nice spike up in yesterday's markets. You can see here, big swoosh up. So Western Union, telegraphing success in the markets, illustrates my whole number concept like a charm, right? The base was the 25 whole number, ran up not only past the 26 whole number, but right into resistance, right in the 80-90 cent mark, right under the 27 whole number. Trading successfully within the whole number ranges is a core strategy that I teach in my live room and also in Swing Scans. So it's another opportunity to learn. But look for hot charts with big green candles, right? And by the way, even if capital is limited, and I realize for a lot of folks that's an issue, especially the younger people out there, it's infinitely smarter to trade smaller share size of a consistent chart that's likely to be profitable than a risky $3 or $4 low float pop and drop small cap stock that's almost impossible to get a successful trade in and out of. You know, if you've ever seen that kind of strategy misrepresented out there, you'll know what I'm talking about. What you want is consistency, especially if you're swing trading, for example. If you're day trading, great. Big green candle days, we hit it and quit it. Swing traders, we scale in. We go in above resistance. We add to the trade on a breakout. We scale in at a new high breakout and kind of build the trade over time strategically. So that's an intelligent way to trade, is start off small. Just so you know, my metrics or my numbers in terms of how I actually trade, my biggest winning trades have started off from mighty oaks, grow from small acorns, or some way to say that. Somebody help me with that. From anyway, you plant a lot of little small seeds, and the ones that stop out doesn't cost you much because you're only in, 20, 30, 40, 50, 100 shares at the most. And what you want to do instead is plant a lot of seeds. Maybe I think I'm in something like 16 positions right now. The biggest winners are ones that and again, I always start off small. So you might want to trade, say, $500, $600, $800 worth of an individual stock. So for $20, so something like this, if I buy over 27, it'll probably be 20 or 30 shares at most, under $1,000 of capital. So that way, if it misbehaves and has some shenanigans and crashes and burns and goes back down against me, it goes sell, sell, sell. It's going to cost me less than $100. If it starts to work out or keeps going up like it has for me, I can scale in and double down, martingale in every couple of points. So that's the kind of intelligent strategy that professional traders use, and you should too. You got about 2/3, I'm looking and scrolling through these, around 2/3 day and 1/3 swings. Okay, good to hear it. Right, Bill. Yeah, good point. Can you imagine the payback on a $4 billion hotel? Sports gambling is $4 billion. Does it work on a breakdown? Yeah, absolutely. Yeah, same thing. If our markets crash and burn, which isn't in the immediate cards yet, we're rallying to new highs, right? But if the markets do sell off, you can do the same thing to the downside for charts that are declining. So yeah, absolutely. Good question. From a sector standpoint, well, first of all, let's do our support and resistance on the S&P. If we keep going up, any new high makes sense to buy. The price that proves longs wrong would be a loss of, and I use 2 days support. So if the S&P gets back down under 30.20, watch out below. Use 2 days, at most 3. Use a multi-day approach to swing trading, right? And also to evaluate market directional volatility or reversals. If you see a couple of red candle days in a row, that often leads to a big epic drop in a declining, not just 2 random red days like this. They have to be in a declining pattern. You see 2 red days, of which the second one's close is lower than the previous day's close. 2 red candle days in a row often leads to a breakdown if it loses support. So that's one that still held steady. Here's one that sold off like a son of a gun. Look how the patterns are almost identical. See those 2 red candles? 2 red candles. What's different is this one was after an uptrend. This one, however, was after congestion, right? So that's also important to understand the nuances of price projection and how to trade intelligently. Always trade markets first and individual stocks and ETFs and ETNs second. So anyway, support on this chart I would use right under the 30.20, resistance just at any new high. Our VIX is way overcooked down at 12.13, so look for a potential reversal. If we see the VIX recover 14, watch out below. The stock market's likely to drop. So that's a key resistance area. I'm going to start covering the VIX more carefully here because I love trading the VIX ETNs, whether it's SVXY to the long side or TVIX and VXX for bounces. If they come back to life, if the VIX recovers 14, the stock market's likely to be in a pullback mode at that point, and our inverse instruments are likely worth trading. So that's another good word to the wise. From a sector or industry group standpoint, biotechs and pharmaceuticals are the hottest Industry group of the bunch. You can see our NBI is up nicely. Enthusiastic buying, right? We had a hammer down here. It's hammer time. Bum, ba, da, dum. Live from Colorado, it's Calhoun. Wake the F up, people. Anyway, let's take a look at this. We got a nice breakout candle here. That's the biggest candle we've seen since way back here. So we got a really good breakout candle. Biotechs are hot. Worth keeping an eye on those. Semiconductors, a second place breakout yesterday, but not quite as strong a directional volatility move. But still, we're up at new highs. So if we break 1,700 in the Philly Semiconductor, the SOX index, AMD, Taiwan Semi is good, and Micron, those are my three favorite semis. May be good for new upside breakouts. What else do we have going on? What else is worth a shot? Well, like I mentioned, one of my swing scans picked last week that my members were thrilled to get, no doubt, if they traded it and actually paid attention, nicely in the money. And Western Union, telegraphing new price action breakouts, biggest green candle of the 3-month chart was yesterday. That's another quick technical trading tip, is you want to pay attention to whenever you've got a big green candle, is it the largest green candle on the 3-month chart up at a new high? And if it is, you probably get a little pullback or a mean reversion drop the day after. So Monday and Tuesday might soften up a little bit, but middle of the week or beyond may be good for more over 27. So that's another good precedent that tells you got institutional volume, 14 million shares yesterday compared to an average volume down near 6. Over double the average volume yesterday, and Western Union may make it telegraph its way and up to new profitable breakout signals. So good stuff. Hey, Walt, I have not seen AT&T lately, but I will pull up T. Let's take a look at that. Doesn't blow my hair back, but it is in an uptrend at least. But I think there's better charts out there. I like PDD. Here's one, Panduo. I have no idea what this company does, but we nailed the breakout for our traders earlier in the live room. Always be on the lookout for these bullish cup breakout days, which is why as a trader you want to use a multi-time frame analysis. Look at the 90-day. You might want to look at the 15-day chart. Really good directional move up. And usually after you get an acceleration ramp like this, nice steady uptrend, breaks out to new highs. I always talk about acceleration ramps at my money show appearances, then it goes back into resting mode. If it breaks over that whole number, again, there we are with our whole numbers again. Calhoun's whole numbers. Works like a charm. We're going to see if it breaks north of 43. So that's a good directional breakout in PDD. Panduo. Interesting name. I need to look up what kind of company it is. But anyway, bullish cup breakouts make for a good signal. Another signal that you want to pay attention to is, and I've taught, for those who've been with me for years and you've been with me in Breakout Mastery and in my swing scans events, you know that we like to cover daily candles in which you've got a small whole real body followed by a larger, 1.5, 2, 3 times the whole real body on increasing volume is important to use as a confirming technical, an increasing pattern there where it takes out new highs. So usually when you see a small green candle and an uptrend followed by a larger green candle, it may well be good for another run to the upside because that's an increasing volatility signal. So that's another good pattern to look for. Well, thanks, folks. What else do we have? Here's another one, MBT. This is one I gave my small cap scans members. For those of you who trade small caps, you want consistent charts. What do you notice about the color of the candles the last 2 weeks in this chart? They're all green, right? And price action is going up. Look for the ratio of green to red candles. And of course, the more green it is, the better. If it looks like a Christmas tree, green and red candles, stay away. Especially right now, and we're in bubble territory, almost bubble territory. Another 10 handles up in the S&P, and we're in bubble territory. So if we get another 10 handles up, definitely be cautious about anything that doesn't have a preponderance of green candles and price action breaking a new high. So we got the bullish cup breakout, move above all 3 MAs. We're up here right under the 9 1/4. It may be good for more as well. So that should do us. Since there's so many of you here, let me ask, I asked this 45 minutes ago, We got a really big turnout. I usually show up early here, by the way, too. So for all of you just tuning in, my stop loss of the week, it only cost me 40 bucks, but still it was a stop. I bought 200 shares at 15.85 here. I got stopped out. My stop loss was just a quarter point at 15.60. I told my traders in the live room yesterday this was going to be a big breakout. And all of you are members, hundreds of folks, you know, I told you I had a feeling that this is going to be a coiled breakout, especially if it recovers the previous day's low, which it did. But I got shaken out. One trader had the correct answer. How would you have managed the trade differently? Was the entry a bad entry price? Not really. 15.85 was okay. Just happened to be a topping tail, unfortunately, which I hate. Little market maker fake out topping tails. I see that a lot lately too, by the way. The fake out pattern is if you see a thin spike up and it starts to pull back, usually it's good to get out because it'll usually keep going down, which it did right under the 15.80. But anyway, I bought 15.85, got stopped out at 15.60. And of course, it runs up a point and a half without me later in the day when I was down at the car dealer getting my snow tires put on. But how would you have managed the trade differently? Would you have traded smaller share size? Would you have traded at a different price? Would you have re-entered the trade at a new high breakout or something different? Or would you have not traded it at all? I'm curious. I'm fascinated to hear what you folks have to say because we're all traders, right? We're all like to see small size, entries and exits, multiple trades, smaller stops and re-entries. You guys re-entered about 16, around 16.10. Hey, thanks, Steve, right? Somewhere right over the whole number, right? I'd wait a day. Okay, well, get back in. If it takes out new highs north of 1780 next week, it may well be worth a shot. You guys is one of those charts that I have traded for a very long time because it's got such great volatility. I was trading it on the way up here, now waiting for a new bounce. We got a bullish engulfing right here, right? That's called a bullish engulfing. Long signal there really didn't move much, but it did recover the moving average line. So you guys, this is one of those, the natural gas big sold off chart, right? This is the 1 year chart, split adjusted this time last year. It was as high as 250 a share. Now on sale, fire sale for the low price of just 18 bucks. Anyway, when you're looking for plays in these kind of charts, you really want to qualify it, make sure that it's worth trading in the first place. So the volatility, the trading range, is an especially essential tip in terms of what you want to look for. So thanks for being here, folks. I'm going to wrap up. I've got swing scans coming up in around 10 minutes. Let me know if any questions. If not, let's see. Steve, hey, Steve, I draw a line right there in the downsloping tops and break out of the line by. Right, good point, Steve. Frank saying put a stop at the bottom of the gap. Right, and that's a strategy that I advocate. Kind of a quick note that I teach in the live room is intraday swing trading. And that's where you, instead of the 200 shares, I'd only do like 50 shares. I usually do 50 share trades. And that way I can put a stop under the low. I could even use a 1 point stop on 50 shares and still have the same stop loss cost, but ultimately it works out. And if I scale in, say, usually I double down on a breakout above a whole number, it'd be in 100 shares, say it's 16.20. And I usually sell the 80 or the 90 cent mark. So that would have, you're right, that would have been the correct thing. So always look for reverse engineering my failures as a trader, of which I've had thousands and thousands of failed trades and thousands of winning trades too. The trick is learning and memorizing. The older you get, the tougher it is to memorize the difference. The other thing is wait till it gets above the closing range. And that was not coincidentally right near a whole number. So if I just use my whole number breakout strategy, not trying to jump the gun, a breakout over the whole number, like many of you have pointed out, would have been the better strategy. So thanks. Does this help to cover stop loss, lessons learned from a failed trade that I just made and get you all thinking? Because I like to read all these comments because you guys help me become a better trader too. And I'm very deeply grateful to all of you for that, because we're all traders and we all have different experiences. We all learn from each other, which is why I like the community we've built here at Trade Mastery. So thanks. Question about recording the 20-minute video. Yeah, it should be on my YouTube channel later this weekend. Help from failed trades more valuable. Okay, thanks, Steve. Good to know. Stop loss management. Max, good. Thanks, Bill. Hey, Mira, how you doing? Good job, Ken, to share good and bad, right? Hey, thanks, Aaron. You're welcome. Trying to read this. Yeah, another trader saying go with smaller wins more frequently. Trade high beta stocks and options. Absolutely, William. Thanks, Bill. Hey, Mark. Mark had a good point. Mark got 2 of my trades yesterday that I missed. So sometimes my traders do better than, often my traders will do better than I do. I call the shots of what's worth trading. Yesterday's picks, by the way, this is the list, and I'll show this with you guys every single Saturday. It's the Friday. I don't have time to go over all 5 days worth, but CRC was a pick for our members. US Steel was a pick for our members. Pinterest on the bounce was a pick for our live room members yesterday, as was Kraft Heinz on its little pop here, and AMD, one of my top 3 favorite semiconductor equities, that made a nice continuous move up. So lots to learn. And thank you for being here. Appreciate it. Oh, thanks, Aaron, saying a staff member of mine was in a club in Germany. Okay, good to hear it. An international crowd. It's great to see. Well, that's what brought you here. Okay, thanks. Yeah, it's neat to have. Oh, thanks, Bill. Hey, Mark. Bill saying, nice going on, Mark. Yeah, he got 2 of my alerts that I was off trading different instrument and missed it myself. So anyway, the point is in the live room, I cover these type of alerts for everyone. So let's wrap up. I hope that y'all have a fantastic week ahead. We've got really good. There has honestly never been a better time to trade because no commissions. I mean, I can't believe it. 0 commissions. My 2 recommended, used to always recommend interactive brokers, but I can't in good faith recommend them until they give you the pro platform at no commission. So unless or until they ever do that, I highly recommend Fidelity and TD Ameritrade. Those are my 2 top picks for brokers because especially Ameritrade, you get the Thinkorswim platform, which was coded by the brilliant Tom Sosnoff back in the day, and it's a great platform. So TD Ameritrade, I've got an account with them as well, and I can't believe you can open up an account for just a few $100 and get all the data and world-class charting software with 0 trade commissions. That's brilliant. So you can take a lot more shots at the market and trade small and trade more often, more frequently, because you can in and out without the $8 overhead cost. And so you can repeatedly trade. And that's one thing I urge you all to do is test and experiment successful breakouts. Expect that you're going to get stopped out more than half the time. That's perfectly normal, even after 20 years. Nobody gets 80 or 90% in their trades, even after decades and millions of dollars worth of trades. The way you make money is really, really super tight stops. That's kind of it as an active trader. Under $100 stop losses. Your stop losses should never cost more than $100, ever, unless you are in a swing trade and it gaps against you on an earnings miss or some other unforeseen circumstance, which is why, again, it's smart to start small with 20, 30, 40, 50, 100 shares at the most. So play it safe, play it tight. Let's go get them. And just a reminder, a polite, honest reminder here that I do have a new special I put together this morning for you. The last time I offered this a few months ago, it was really popular. I got so many traders and new traders from around the world that took advantage of this. My all access pass that includes well over 300 hours of training each year. You get the live room 5 days a week. You get the swing scans each Saturday after these broadcasts, plus small cap scans and breakout mastery, all for $9.97. On sale now for the next 2 weeks. And that's a really good deal. It's the best deal that I've ever offered. I'm repeating it. There's lots of information. It's not an onerously long page. Oh, and by the way, too, I'd appreciate if you guys could vote me #1 again for the Reader's Choice Awards in Stocks and Commodities like the world's traders did last year. I'm the #1 rated trading author in stocks and commodities on the planet. So thank you deeply for your support and your votes. Vote me up #1, and I was voted #2. I got the gold and the silver medal, so that was kind of epic. Vote for me again if you want. But anyway, the point is, you can visit this trademastery.com/all-access, or just remember the phrase crush Wall Street, right? Crushwallstreet.com will take you here too, because that's what we endeavor to do each week. So the All Access Pass is yours for just $9.97. It's a great deal. It's much cheaper than going to one of my 2-day seminars, which is like $1,500 for 16 hours. You get 300 plus hours for only $9.97. So that's a really good value. So if you find my information entertaining, valuable, profitable, successful, very smart, very well thought out, very specific, and not the gambling small cap under $10 pop and drop stocks, but more consistent charts, then this is the way to go. I am Ken Calhoun, Day Trading University and Trade Mastery, bidding you the best for a happy holiday season. Be safe out there. There's a lot of moron drivers, so be careful out there. And go ahead and join at trademastery.com All Access. Sales on for the next 14 days or whatever, 2 weeks from tomorrow. So go ahead and register today, and I'll see you guys in the live room coming up next week. So take care. Great time to trade with the rally market. I'll show you how it's done. See you guys next time, and farewell. And I really wish I didn't even have to sell stuff or run a business like this. I'd rather just be just me and traders, right? But hey, gotta pay the rent, or I've already paid off my house, so what I gotta pay for? Fancy stuff for my wife. We've celebrated our 21st wedding anniversary just a couple weeks ago, so I like to treat my wife to nice things, like trips to Bellagio, and she's already got all the purses and jewelry and shoes and all that any woman needs. So I like to take care of people, including you folks. So join now, crushwallstreet.com, and I'll see you next time. Trade smart, and I'll see you Saturday too.